JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 25th of February 2021. So yep, welcome everyone. Welcome to the Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff basically. But yeah, before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, jumping into the charts, the first one I want to pick up here is Nikkei 225. So this morning we saw the index recovering its, well, actually most of its losses, or not actually most of it, all of its losses made yesterday. And it pushed further north, however remained below this 30,297 territory, the one that I keep talking about. And just to kind of remind you what that level was in the past, I need to go back into a monthly chart here and scroll back a little bit here. So that's the lowest point of July, this one right here, the lowest point of July of 1990. So again, we're pushing higher. And by the way, while I'm here on the monthly chart, you can see that we had a strong move this month already. So going basically from 27,000 here, 27,000 and a half, all the way here towards the 30,000 and a half. So yep, I mean, that was a decent move here for Nikkei. Not to mention that in the past 4 months, it didn't have a red month here, and basically, yep, for now everything's kind of looking quite positive. Now, if we jump back into a daily chart, you can see that yes, we are trading below this hurdle, below this 30,297. So yep, in a way where I'm keeping a close eye on this one, because if we get a nice good break above this and we get the daily candle staying above this area as well, then yes, higher levels could be met, and we could go for further upside. For now, just probably to be on a little bit on the safe side, what you could do is keep an eye on this little downside resistance line, which in a way could show that a break of this downside line could also come on a break of this 30,297. So a lot of things could kind of add up here and work out for the bulls. Now another thing that could be working out for the bulls here is a potential flag here. Again, it's not an ideal one, but a possible flag here. This little correction that we're seeing here to the downside could be considered as a potential flag, so a bullish flag. But again, if you want to be kind of on the safe side, if you want to examine that scenario, then probably you could wait for a break above the 30,715 territory right here, marked by the current highest point of February, and then yes, we could go from there. But for now, long story short, basically, what I'm keeping an eye on here is the lowest point of July of 1990 here near the 30,297. If we get a break above that, then yes, I'll go for slightly higher levels. And then yes, my next target here will be this 30,715. But if that gets broken, this will confirm a forthcoming higher high. And well, I mean, we could start moving towards that. I think it's the highest point of August of 1990 here, and that level level is around the 31,371. Now, in case of the downside, of course, a break of this, let me just adjust this back here, a break of this upside line here drawn from the low of the 30th of October is required. Because again, until then, I mean, it could drift lower here. It could find support somewhere near the 21-day EMA or even this upside line, and then yes, we could see a rebound and a push back up here. But again, that's why I would prefer to, for the downside, I would prefer to stay probably more, or should I say, take a bit of a conservative approach, and yep, wait for a break of this upside line. Shanghai Composite. So here, yesterday I talked about this one, and basically. The index drifted nicely to the downside in yesterday, and today we're seeing that the index tried to push further south. It did so initially, but the bulls were able to bring the index back above the 21-day EMA and this 3,587 territory, or should I say, actually, it closed just fractionally below it, but basically remained here near this 21-day EMA. So what it means, guys, now is that given that we are seeing a bit of a risk-on environment right now, again, the indices starting to reverse to the upside a little bit. That's why I'm gonna take a careful approach here. I mean, initially I was aiming for maybe a further decline here, but given that it kind of traveled back above the 21-day EMA here and stayed above it, then well, this kind of raises concerns about further declines. Maybe we could see actually a push higher. However, for the upside, for me to kind of get a little bit more excited with the upside, I would actually prefer to wait for a push above this barrier right here, this 3,637 zone, and then go for slightly higher levels, because again, it could push higher here, it could find resistance and then reverse back down. So that's why, just to kind of protect myself a little bit here, I would prefer to wait for a push above this barrier first, and at the same time we could get a let me just draw this one very quickly here, a break of this tentative downside line here, and yep, all this could add up here nicely for the bulls. So for now, like I said, guys, keep your eyes on this barrier here for the upside, the 3,637. For the downside, well, I mean, I would like to see another slide here to the downside, and to be honest, if I want to go for a possible test of this upside line here drawn from the low of the 19th of March, well, I mean, at least I would like to see a drop below the current low of today, and that's near the actually the lowest point of today, because the index is already closed. So the at 3,568 zone, approximately around here, guys. So a nice good drop below it, yes, could maybe open the door towards a possible test of this upside line. So yeah, for now, let's see how this is going to play out, of course, and of course, let's see how the European and the U.S. Equity markets today are going to trade, if they're going to go in, if they're going to push higher, because yesterday they managed to recover. If they were going to push higher again, then we could see Shanghai Composite also maybe following suit tomorrow, and yeah, pushing nicely to the upside, or actually today later on. I mean, if depending where you are. So jumping into the German index, the DAX, and here you can see it pushed nicely to the upside. However, I'll jump straight into the point that I've mentioned previously. Basically, for now, I'm kind of neutral on this one, because again, it's kind of oscillating around the 21-day EMA, and that's not really working out well, I would say. So for neither of the sides, so neither for the bulls nor for the bears. For the upside, if you want to aim for some higher levels, again, I'll repeat myself. I would like to see at least a push above this 14,026 territory, because at the same time, we could then, of course, test this downside line. But to be honest, this downside line is a little bit on the tentative side. However, yeah, we'll be very careful. If we get a break above this 14,026, then yes, I'll aim for some higher levels. if we fail to move above this downside line now, yes, of course, that's where maybe some bears could step in. But looking at the cash index right now, the futures market, I mean, we can see that the price is currently balancing around the 14,045. So that means we will be above this area, but still below this downside line. So that's going to be interesting. So that means that exactly. So this idea is kind of working out already. So we got that pop above the 14,025. Okay, so now the big question here is what we're going to do with this downside line. If we're going to get a break of it, then yes, we'll aim for some higher levels. But if we're going to struggle to overcome that downside line, well, I mean, maybe, like I said, the bears could step in again here and drive this one lower. However, I'm still kind of a little bit cautiously bullish here. So yeah, let's see how this is going to play out. If we get a break, then my next target is the all-time high near the 14,169 zone. Now jumping into another index, and that's the dollar index. And yesterday the index drifted back down. So initially managed to go higher, managed to get closer to the 21-day EMA, but then it started reversing back down here. And today we're seeing this kind of a flirt again with the 89.96 zone. So of course, what I would prefer here is to wait for a good break below this area, because again, if we get a break below this, then this will confirm a forthcoming lower low, and yep, our next target could be the lowest point of January here near the 89.23 zone, and then we'll take it from there. We'll go step by step on this one. For now, I'm leaning a little bit more towards the downside here. For the upside, I'll still stick to the same idea. I need to see a push, well, I need to see not only a break of the downside line, but also a push above the 91.05 level, and then yes, higher levels could be met. Now, for now, looking at gold, and yep, gold is trading lower. Yesterday, if you remember, I mentioned that if this 1795 and a push higher again, well, first of all, of course, let's start from the fact that if this area right here, this 21-day EMA together with a 200-day EMA did provide good resistance, and we saw that the little decline. However, now due to kind of yesterday's trading activity here, to be honest, I would like to be a little bit on the careful side, because yes, we did get a drop lower, so we got that move, strong move back towards this 1785 territory, roughly around here. But yeah, I mean, then as you can see, the bulls picked up very quickly here and drove this one higher, back up here. And although today we're seeing another slide here, but if the dollar index suddenly drops here below this key support zone, now this could work out well for gold, and gold, we might see gold pushing back to the upside. So keep that in mind, guys. I do understand that initially I was kind of talking about this little scenario, but we have to kind of go kind of hand in hand with what's happening right now in the market. So in a way, this little idea here that I've mentioned before, yes, so it kind of partially worked out. So we had a rejection here near this area, near this 1819 zone. We got that little slide. However, we didn't really get the slide of all the way here. So now I need to probably readjust this a little bit, because again, if the dollar index starts drifting lower here, then well, maybe we could see gold actually pushing back up here towards this downside line. So a long story short, for now, I'm going to take a bit of a, I'm going to take this approach here, and because if this area here, somewhere around the 1795 or even slightly below it, if this area continues to provide support, then we could see this little scenario working out. Now, if we see a drop below the 1785 territory right here, and we see the daily candle closing below this, then yes, we could go for further declines here, and yep, we could go for these lowest for this lowest point of February near the 1760 zone. But if if the commodity struggles to overcome this area, like I said, consider a possibility for seeing this scenario here, right here. Now, jumping into WTI oil very quickly, I'm not going to spend too much time on this one because again, it's very interesting, and it kind of worked out the way I was talking about it. Well, the idea was yesterday that if the 62.25 territory continues to provide resistance, then we might see a correction here to the downside. But it failed. This area failed, and what I was saying then, if we get a break above that, then my next target, of course, is the 65.62 territory. And just to scroll back here, you can see that this is the highest point of January of 2020, or in other words, the highest point of January. So will we reach that level? Well, let's wait and see. For now, everything's kind of leaning towards that, but again, we have a good opportunity to do that. I mean, we've managed to clear this barrier here, this key resistance area, the 62.25. Now what I'm going to be doing here is I'm going to be aiming for that 65.62 territory, because as we know, the market does like sometimes these beautiful levels, like the highest point of a year, yep, this is, like I said, this is the highest point of 2020. Roughly around the 65.62 territory. So keep your eyes on that one. If the commodity drifts back below this little territory right here, this 62.25 zone, then yes, we'll go for a bit of a corrective move here towards this upside support line. Bitcoin. Yep, there we go. Bitcoin. So the idea that I mentioned yesterday was that we might see a bit of a larger correction here to the upside. So we almost got our 50% retracement. We might see it maybe today. I have my arrow here up until the 61.8 just in case. But again, let's be very careful for now. For now, yes, we are in correction mode. Well, I would say correction within the correction, but anyway, well, let's see if this area here will kind of provide resistance or not. The 50% retracement on the Fibonacci and the 61% retracement on the Fibonacci. So the 50 is roughly around the 51,640 territory, and the 61.8% retracement is roughly around the 53,230 territory. So keep your eyes on those two levels. I mean, if the crypto struggles to overcome these, then well, I mean, we could see another slide. But if we pass, I mean, we go through these, then yes, of course, we'll start aiming for the all-time high, nearly 58,321, or even above that. But for now, it is how it is, guys. Let's be very careful. We already did have a decent rally, and if you remember, a while ago I was talking about for you to keep an eye on the monthly candle. Now I do apologize for this little mess here, but basically, let's see if we're not going to repeat the scenario of 2018, where we had like a good rally here in December. January was then it reversed to the downside, but this one maybe is a little bit kind of overdue. And let's see if March is gonna kind of present itself with a possible maybe retracement here. But again, too early to talk about that. First, we need that clear kind of signal, and for now, probably the signal could be on a break of this little short-term upside line drawn from the low of the 27th of January. Jumping into a few pairs, AUDCAD. So here, very, very interesting developments. I've picked up on this one recently, and basically the idea initially was that to see if we get a break above the 0.99 territory, then yes, higher levels could be met. Then the next target is the 1.001 level right here. We came close to testing it, but just kind of fell shy of, well, actually didn't fell shy, but still have a bit of room here until we could reach that area. Currently, it seems that the pair is flagging out, which seems to be forming a possible bullish flag. So let's see if we can actually reach this 1.0, well, the psychological 1 level. We're not far from it. So, yep, in a way, I believe that there is still a bit of steam here for the bulls. And, yep, we could see some higher levels. If you want to be a little bit more on the safe side, wait for a pop above this barrier, the 0.9990 territory. Now, don't get me wrong, I do understand we only have around 10 pips here, but in a way, I don't think that maybe the psychological 1 level would be that barrier. I mean, we could maybe even overshoot it a little bit. So yeah, guys, for now, long story short, if we do clear this 0.9990 territory, then yep, I'll go for some higher levels. And then, of course, we'll have to just scroll back here into history. Excuse me. Yep, and this is the level that I'm keeping an eye on. But of course, above that, we do have this little target. Oh, not this one right here, but let me just try to capture it. There we go. The 1.0136 territory, that could be a good target as well, guys. So keep that in mind. But for now, it seems that the pair is flagging out. Jumping into NZDJPY, and oh, by the way, in terms of the economic calendar, very quickly, guys, so today we did get some data from not very significant, actually, no, so from Australia and New Zealand. No, there's nothing to kind of focus on too much, but probably what you could keep an eye on today are the industrial and services sentiment from the Eurozone. That's something to keep in mind. Consumer confidence, that's going to be an interesting one, of course. But then mainly from the US, guys. I mean, we'll have the US preliminary GDP figures. We'll have the core PCE prices. Now, that's something that we will keep an eye on. And of course, we will have the initial jobless claims from the US as well, together with the pending home sales. So yeah, I mean, a lot of data from the US today. Like I said, yep, there is check out the economic calendar for that. But yeah, guys, PCE prices, that's something that we will keep an eye on. That's the Fed is going to keep an eye on that one as well. And then yeah. Excuse me, and then yeah, we'll take it from there, guys. So for now, like I said, keep your eyes on those. Now, jumping into NZDJPY, I've looked at this this pair recently, and basically what I said to you guys, that if we get a push further north, and yesterday, look at the push further north we had. I mean, we tested this 78.86 territory. I spoke about this level recently, and basically this level is the highest point of December of 2018, and look at where we are right now. So can we go further above this? Now, this is going to be a tricky one. We have also kind of distanced ourselves quite a bit from the 21-day EMA. However, don't get me wrong, I mean, that's not an indication that this will reverse sharply to the downside. What I'm going to continue doing here today is, for example, monitoring this barrier, the 78.86, because if the daily candle remains below this area, then maybe we could see a bit of a corrective move lower. However, I would prefer to see a drop below the 78.30 territory before, let's say, considering a possible larger correction to the downside. So if it closes below the 78.86 but stays not far from it, I'm still kind of cautiously bullish, but if it starts dropping below the 78.30 territory here, then yes, there is a greater chance that we could see a bit of a corrective move here to the downside. USDJPY, quick update. Still watching this level, so I'm not going to spend too much time on this one, because if you watched my videos yesterday, I spoke about this pair. Still watching this 106.11 zone. This is where it's currently getting a hold up. In order to go for some higher levels, a break of that level is required. GBP NZD. So this one is an interesting one because, well, I mean, yesterday we saw a huge decline. So initially it pushed higher, almost tested the 200-day EMA. And then look at this. I mean, it just sold off here, and most importantly, dropped below this support level, which previously I was looking at as a resistance. Now it dropped below that support level and stayed below it, and stayed below all of its EMAs now, and found good support near this 1.8992 territory. We're seeing today a bit of a corrective move here to the upside. It might correct a little bit higher, but if it struggles, let's say, to overcome this barrier, this 1.9114 zone, then yes, another slide here could be possible. So keep that in mind, guys. EURUSD. Now this one is an interesting one, and here you can see that pair is battling, and I mean, most important, we have a, well, if we apply technical analysis, which we always do, we have a hammer, a reversal signal, but does that mean that we're going to go for lower or for higher areas? We could, because given the kind of the steep decline we already had, also a nice kind of hammer here, a reversal, and the fact that we have the RSIs now pointing back to the upside. Now this could mean something, but I'm not saying that this is for sure a reversal sign. But yeah, guys, I mean, if we start climbing above yesterday's high, which is roughly around the 0.8616, now that's where it could become interesting for more buyers, and we could see maybe a larger correction towards this downside line. So keep that in mind. And finally, EURUSD. So beautiful move here to the upside. So again, if patience works out well, and yep, if you remember yesterday, I said to you guys that I'm going to take a neutral stand if it continues balance here, because I mean, it was initially struggling to overcome this neckline of a potential. Today we're seeing a nice push higher. So boom, everything seems to be working out well for now. Again, weaker dollar index could play out nicely here for EURUSD. We're seeing some kind of recovery in the EURUSD as well, so maybe all this is going to roll into a stronger euro today. So yep, keep that in mind, and let's see how this is going to play out. For now, I'm leaning a little bit more towards the upside, but if the pair starts, let's say, reverses sharply and drops below the 21-day EMA, I'm going to stick to the neutral side, and for me, for the downside, I need to see a drop below the 1.2023 territory. That's my game plan still, so I'm keeping an eye on that. So guys, thank you very much for watching and listening. I'll just have to wrap it up here. I need to jump off very quickly, guys, so thank you very much for watching.